Aeva Technology is a company that develops sensors that are being used in cars and robotics to measure distance and to identify objects. In this video, I'll cover everything you need to know about that company. Here is the video format. First, I will explain what Aeva Technology do, when it was established, and other basic information so you will have a good understanding of the company. Then I will talk about their products they are selling, who they sell their products to, and what are the different use cases for those products. Finally, I will talk about their business model and financial results. As always, everything I say is not a financial advice, so please make sure you do your own research. Let's start by introducing the company. Aeva Technologies is an American tech company that develops advanced sensing systems primarily based on something called FMCW LiDAR. That stands for Frequency Modulated Continuous Wave Light Detection and Ranging. In simple terms, their technology doesn't just detect how far an object is, like traditional LiDAR does, it also measures how fast it's moving. That gives their sensors an extra dimension of information, which is useful for applications like autonomous driving, robotics, industrial automation, and even aerospace. The company was founded in early 2017 and it's based in California. It has grown to several hundreds of employees as of mid-2025, and it also has operations in places like New York, Germany, China, India, and Thailand. Aeva went public in early 2021 through a SPAC merger. That move gave them a significant amount of capital, over $500 million, to accelerate their research and get ready for mass production. So now that we have a basic understanding of the company, let's talk about their products. As of 2025, Aeva's best-selling product is the Atlas, which is a 4-liter sensor designed for mass production. This sensor is already being shipped to key customers and is used in several industries, especially automotive. Another important product is the Atlas Ultra, which is Aeva's most advanced sensors as of now. It offers ultra-high resolutions and long-range detection, and it's specifically built for use in Level 3 and Level 4 autonomous driving systems. The Atlas Ultra was officially launched this year 2025, and while it's not full production yet, several clients are already testing for future vehicle platforms. So now let's understand how those products are really being used in the real world. In the autonomous sector, Atlas Ultra is being developed for self-driving passenger vehicles. Its ability to detect moving objects with high precision at distance of up to 500 meters make it ideal for highway speed automation. Aeva recently announced a deal with a top 10 global car manufacturers who is planning to use the sensor in new production vehicles platform by 2027. Aeva sensors are also being used in airports such as JFK. There, the sensors mainly aim to monitor passengers' flow. Amongst their clients include Nikon and Airbus. Airbus, for example, is testing Aeva sensors for autonomous taxiing on airport runways. And now let's talk about some recent important developments. In May 2025, Aeva announced a $50 million strategic investment from a subsidiary of a global Fortune 500 company. As part of the deal, the partner also agreed to become a manufacturing provider, helping Aeva scale production. Another update came in April and May. Then Aeva launched a brand new product called EVE-1D. This is their first high-precision industrial sensor made for factory automation and other non-automotive use cases. In May, they announced they had already received orders for over 1,000 units. And now let's move on to their financials. First, Aeva still is an early stage company and it's not profitable yet. As of the latest quarterly report, the company reported around $1.3 million in revenue, which is very modest. But more importantly, they also reported a net loss of about $32 million for that quarter. On the balance sheet, Aeva has around $225 million of cash and short-term investments, and the company says it has enough runway to operate through at least 2026. But if revenue doesn't ramp up, they will likely need more funding down the line. Also, it's important to mention that they have no debt at all. And finally, when we compare their valuation to performance, these things get tricky because Aeva has a market cap of around $2 billion, but its revenue is under $10 million. That's a very high price to sales ratio, which reflects investors' optimism about their futures, but it can also reflect that the company is extremely expensive at the moment. So, as always, do your own research and get to your own conclusion regarding what you think about this company. I hope you enjoyed this video and I will see you in the next one.